Mehta Fincon Global Investor Conference, organized by Mehta Fincon in India's Diamond City Surat, brought the creme de la creme on an innovative platform of excellence. Catering to over 500 HNI investors, the Mehta Fincon Global Investor Conference became Gujarat's first conference dedicated primarily to HNIs in Gujarat. With the theme Science of Investing, the conference highlighted matters critical to investors, investment strategies, and relevant approaches to portfolio management and perspectives on the economy.
I would now like to invite on stage Managing Director and CEO of our company Mehta Fincon, Mr. Krunal Mehta, to welcome this august gathering.
A very good evening to each one of you attending this Mehta Fincon Global Investor Conference, which is Gujarat's largest and first HNI event post-demonetization across India. The theme of the conference is Science of Investing. Friends, I have been traveling across India since last 3 years to attend such large conferences, which mainly focus on distributors. This came in my mind that why not Surat and why not the conference for investors? This prompted me to work in this direction with my team and make the dream of this conference come true. And since the conference is mainly customer-centric and investor-centric, we have a large number of HNIs present over here participating from various cities. I assure you that this conference will be the most best conference you have ever attended. Welcome once again and have a knowledgeing and interesting time ahead. Thank you.
I heartily welcome Mr. Suchit Punos on stage, his keynote address.
I'm here to talk to you about startups. Last year, when you look at the landscape, there's been a change in focus from e-commerce to other sectors. There's definitely been a real alignment of funds by investors and also strategy. And there's a push towards creating a sustainable startup ecosystem, which consists of bringing in several stakeholders, including government, local authorities, to support the startups. I think future is definitely going to be about pragmatic investments, focus on profitability of businesses, rise of India models. I would love to see a global Indian tech company out there. We are flooded by the Googles and the Ubers, all American creations. I think time has come for all the brilliant minds we have here. We need an Indian model going global. And also, more importantly, in the context of a city like Surat, I think what we need is a rise of Tier 2 and Tier 3 cities and startups in these cities that can support the local population.
Ladies and gentlemen, we have a very well-known and warm personality between us, and he is none other than Shri C.R. Patil Sahib. Sir, please come up on the stage and I request you to kindly deliver a few words.
ग्लोबल इन्वेस्टर कॉन्फ्रेंस में आज के कार्यक्रम में हमारे बीच उपस्थित मेरे साथी सांसद दर्शनाबेन, हमारे लिए बहुत गर्व की बात है कि सूरत शहर इस तरह से ग्रोथ कर रहा है कि यहाँ पर एक ग्लोबल इन्वेस्टमेंट कॉन्फ्रेंस का आयोजन करने की आवश्यकता सभी कंपनियों को लगती है, क्योंकि यहाँ से बहुत बड़ी संख्या में लोग पैसा इन्वेस्ट करते हैं। जैसे मुझे अभी बताया गया कि 25 करोड़ से ज़्यादा अमाउंट इन्वेस्ट करने वाले 1980 लोग यानी करीब 2000 लोग यहाँ से इन्वेस्ट करते हैं। अगर ये फिगर सही है तो बहुत बड़ी बात है, और अगर इतने बड़े फिगर होगा तो स्वाभाविक है सबका नज़र सूरत के ऊपर रहने वाला है। तो आइए हम सब मिलकर सूरत के द्वारा पूरे देश को और ज़्यादा समृद्ध बनाने की इस कार्यक्रम में साथ दें। आप लोगों ने यहाँ पर आकर ये जो कार्यक्रम किया उसके लिए मैं आप सबको बहुत बहुत बधाई देता हूँ। हमें भी यहाँ आने का मौका मिला, इसके लिए भी आप सबका बहुत बहुत धन्यवाद। भारत माता की जय।
Shri Rohit Bhai Patel, as you all know, he is the Honorable Minister of Gujarat State for Finance. So today we are honored to receive his video message.
Dear Krunal Bhai, distinguished speakers and participants, it's a matter of great pleasure for Gujarat that the Global Investor Conference has been organized at Surat. It is aimed at providing guidance to the investors how to safeguard their investment simultaneously with probable maximizing the return on their investment. The very objective of this Mehta Fincon Global Investor Conference is to spread awareness about importance of professional management and professional services for investment in capital market. Thanks for allowing me this opportunity of addressing to you. Bharat Mata ki Jai, Jai Jai Garvi Gujarat.
We are going to do the official launch of Mehta Fincon mobile app.
The Mehta Fincon Global Investor Conference also marked the launch of the Mehta Fincon mobile app, a one-stop destination for investors to get updated with day-to-day investment trends and activities, and a destination to avail Mehta Fincon's finest services.
Investors get very rare opportunity to interact with the fund managers. So they rely on the advisors' advice, what they get right from advisors. But today it was something different wherein they could hear the fund managers directly. So that is which was adding value to the investors to an extent. So that was really different from what we have seen.
Putting the onus on HNI investors, Mehta Fincon Global Investor Conference also provided a platform to discuss significant matters, the first being professionalism in investment.
I think the key factor to understand when you are making an investment decision is that your emotions play a part. And it's because your emotions drive a decision, which is essentially a scientific decision, that very often you end up with a wrong result. So what are the two emotions? The two emotions are fear and greed. What makes you enter the capital markets is greed, right? You want to make more money than inflation. You want to create a corpus for your wealth, for your retirement. But when you enter the market with that greed emotion, and then there is a bad news in the world, a nuclear bomb explosion, a new person comes elected as a government like Mr. Trump, the fear sets in that panic you exit, when you actually, if you had waited through that fear, you would have made much more money. So to me, that is what the topic is: professionalism. So the very opposite of professionalism is emotionalism, right? So I think controlling the emotion, understanding how to control it and use it properly would be the key to success.
Right. Kalpen, now that we have established that how we can actually benefit despite a volatility in the market, what does your experience of last 2 decades tell you about why has not investing been able to take off in India in a very larger fashion? It's only gradually happening, and how we can benefit massively from it?
See, the game of investing is about time. We have money. I'm sure all of you who are here in this room, your money is not for few days or few weeks. We have money for really long periods of time. Our needs are over 10, 15, 20, 30 years. However, the language of investing needs to change away from months and years into decades. So the real returns actually come with holding power, with patience, and investing for as long as we as Indians have been investing in all other asset classes. So just because mutual fund investing offers daily liquidity does not mean you have to accept that daily liquidity. The way we invest in gold or real estate or fixed deposits or even our insurance policies for long periods of time, the time dimension is very important. And in that time dimension, my experience has told me that we spend more time thinking about investing, but we spend very less time after we invest, because after we invest, we keep jumping in and out. But it takes a lot of time to start investing.
But Krunal, what's your experience when you interact with several of your current clients? What people tell you, what are the mistakes they've made in the past, or what is the objective? What is your own experience in this?
So the most common mistakes which we observe in investors' portfolio is, if they buy a stock at rupees 100 and if it goes to 110, investors books profit. And If the stock goes down to 80 rupees, he holds on. And if it is again 60 rupees, he may hold or he may average it out. So then it comes to portfolio. That stock comes to his portfolio. We are not building up our portfolio. Actually, the portfolio becomes by such weak stocks. So we are booking the profits in multi-baggers and we are holding on the companies which are making losses. So this is one main mistake which I wanted to highlight.
So what are the things, I see here a lot of early stage investors as well, a lot of youth around here. Some of the things which people can undertake to not waste time in doing research about the market, figuring it out, losing some money as well, and at least start the process of investing.
To my mind, the best advice I can give them is to go to an advisor, right? Because playing around the stock market on your own means that your emotions are dictating it and you will make wrong decisions and it's like caustic soda. And instead of it, the caustic, that portfolio will be thing. Now, the point is that if you go to an advisor, when he builds a portfolio for you, he not only is going to look at what you need, but he's going to look at what fund managers are buying in each mutual fund so that he minimizes the overlap and gives you a truly diversified portfolio. So I think the first thing I would say is that investing is for professionals to manage, and for you, that professional is your advisor, right? And as long as you are honest with the advisor. The second issue is most people don't reveal their full status to the advisor and come to him and say, "Mere isse finance ko paisa bana ke dikao." Whereas if you are totally reveal your life and your goals, your ambitions, your children, your age, how much you can save, they can build a portfolio for you which caters to your need. Because the two important things that the advisor brings from your perspective is financial planning and asset allocation.
An alpha which a fund manager generates over the benchmark, that is fund manager's alpha. But there is equal important alpha which is an advisor's alpha. So in this industry, there are 45 asset management companies having close to around 900 funds. So an investor always gets confused that which fund house to select and which scheme to select. So here the role of advisor comes. An advisor can create a marginal but certain alpha over these two alphas. So this is an advisor's alpha, and let me humbly submit this, that the concept of advisor's alpha is very unique and we at Mehta Fincon has created for the first time in the industry.
Discussing the mastermind's insights on wealth creation, a discussion featuring eminent wealth managers was also organized.
Hiren, I would like to start with you. After analyzing the audience we are in, you have been active fund manager for over 2.5 decades now. What is the crux of your own experience over the time? How can average investor actually beat the market at the same time create reasonable wealth over a period of time?
I think the biggest blood sport that I have seen that investors want to do is to figure out where markets are going. You know, the few things that investors always hear, there's a very simple few tenets of investments that you have to follow. Patience, having a long-term view about markets, and stop trying to predict markets. Because you should not try to do something that nobody has been able to achieve. Try to do something that everybody has been able to achieve. So if you look at the record of some of the best investors, whether in India or globally, they have made money not by trying to predict the markets. They have made money by making right investments and then holding on to their investments over a long period of time. I think that it's a very simple prescription, but people are very excited about trying to judge the impact of short-term events on the market.
Actually, as Warren Buffett says, that investing is simple, but it's not easy. Okay, at Mehta Fincon, you guys do some reasonable level of research. One of the only advisors who got running their own research team. What is your own experience working with the top HNIs of Surat in their investing process? What is the science of investing which you guys have derived upon so far?
So let me link this with the theme of this conference, Science of Investing. So this entire conference revolves around the framework of spreading the science of investing. And if you talk of science of investing, there are four pillars on which an investment decision should be taken. V for vision, C for courage, A for allocation, and P for patience. What does V mean? You should have the vision to see the earnings of a company 3 years, 5 years down the line. And it's not the price which determine the earnings, it's the earnings which determine the price. So if you know that the company is going, the earnings of the company is going to double in 3 to 4 years or 5 years, the price will definitely follow. You don't need to worry about it. Second comes courage. So when it comes to courage, it is all about buying a stock. Third comes the major part of allocation. When it comes to allocation, I see in many investors' portfolio, I can see the stocks of Bajaj Finance, Eicher Motors, Page Industries of the world, but they have allocated, the mistake which they did is, they have not allocated much. They have just allocated 0.5 to 1% of their total overall portfolio. And the stocks have multiplied by 10 to 100 times in last 10 years, if we say. But it has made a negligible impact on their overall portfolio returns. So have that known the power of allocation, they would have certainly allocated 6 to 8% in these stocks and have ridden it. And that would have made a noticeable impact on the overall returns. So allocation, see, one thing is for sure that in a stock market, it is not important on how much you are right or how much you are wrong. What is important is how much you make money when you are right and how much you lose when you are wrong. So this is all about allocation. And fourth comes patience. So if you talk of patience, actually there are many investors who talk about patience. They still have patience. So when we say that they have patience in holding Unitag, they have patience in holding Suzlon, they have patience in holding JP Associates of the world since last 10 years. So patience has to be backed by vision, courage, and allocation. So here comes an important role where these fund managers have that real patience. And as Bill Gates say, patience is the key element of success. And friends, time in the market is more important than timing the market. So in all, if you have to conclude, these four pillars make an interesting combination of achieving excellent returns on the investment portfolio.
Anup, how having a reasonable set of expectations from equity and asset class, which has largely outperformed all the other existing asset classes over a period of time. This is the environment is also a function of that. Talk to us about how you are scanning the current environment so that investors, prospective and current, both can set their return expectations from funds.
The long story is that we've had earnings growth which has been very tepid for the last 4 years. We believe that our economic revival is now round the corner as it has been for the last 3 years. So hopefully this time the corner will be achieved and we will actually go around the corner. And earnings growth will come back. So I think so at the level of valuations at which we are today driven a lot by liquidity flows, which has been very strong. We are all hoping and we are quite expectant of earnings growth to revive in the second half of this year. And once we do that, then we can take a more normalized view on the markets.
Keyur, you have something to say on that?
I would like to add here is that liquidity sometimes becomes negative for an investor. Because if you have 4 asset classes where you are invested in fixed deposit, gold, FDs and real estate, equities and real estate. And if you require funds, the first thing you do is equity mein se nikalte hai, right? Because you get the funds within 4 days in your bank account. So liquidity is one thing good. We can say it should be taken as a good thing, but actually we take disadvantage of liquidity.
Very good point. In fact, when we conduct a lot of investor conferences across the country. And when we ask a lot of people that most of them who are investing and trading both, that how's the experience on both the ends, most of the people say the money which we lose in trading, we actually make up for via the gains in the investment side. So you're right that the investing side makes up for all of that. But Hiren, you've been in the market long enough to see 2-3 cycles. Let's talk about the two big emotions which people get impacted by in the market, greed and fear. Last time we were at 9,200, even 4-5% higher, the buying continued to come. And whenever in the last 1.5, 2 years, we have gone very sharply lower, there's panic on the street. So what is your own experience?
The stock market is a monkey. It will flip. It will go up and it will go down. You can't change the basic characteristic of an asset class. So unless you understand that, there is no point in investing. If you have digested that, if you have internalized that, then you come to the stock market. Because nobody is going to be able to time your corrections for you. And if somebody tells you that, he's fooling you. Right? So I think that greed and fear are likely to continue. You have to make a special effort to say that I want to make money, and this is what the wisest people for the largest number of time has told us again and again, that corrections are very inherent in the market. If earnings of a company compound, the market cap eventually will also compound in line with earnings. So I think that cycles come and go, and they are never going to stop.
I think so. One area which we need to work on or to understand is the meaning of risk. So we assume markets to be risky because they are volatile. Volatility is not risk. Risk is when you lose capital forever. Your own assessment of investing in equity markets is clouded by the volatility and the level of uncertainty, and not by the risk of capital that you lose. People are very happy to lose capital with all the tips they get, but are very scared of the volatility which markets bring from time to time, when it should be the other way around.
So thank you very much. I would like to really enjoy moderating this session.
The kind of enthusiasm we see in for the investment in equities is amazing. They are very excited to invest in equities, and now they are excited to go through professional route like PMS and mutual funds.